Should we buy or sell e.l.f. beauty? Okay, here is the disclaimer, very much fantastic reading. And here is the website of the company in question, e.l.f. We ship to various countries. Okay, so yeah, okay, let's do it like this. Yeah, it's a nice looking website. Okay, okay, I accidentally clicked something like that. I don't really like the animation here to the left. It's very like choppy. But yeah, pretty obvious what kind of industry they are in. This is not a gaming company. It's not a beverage company. It's clearly about makeup. It seems like the brand is specializing on makeup for non-Caucasians. That's been a bit of a topic in the fashion industry because of like there's different type of hues for the different like stuff you put on your face based on like skin color. And here we can see e.l.f. Beauty 259% from the 52-week low, 2% away from the highs. Here is the chart. It's been on a pretty substantial rally, which is of course very bullish. But the reason why this one popped up on my radar is because it might have gone a bit too far. And when we look here at RSI, it's extreme, really extreme. MACD is also ridiculous. PPO, the purple 20-week PPO is literally at the level that's called previous highs. Back here we got a pullback. Back here, and you can see also if we go back here, we had some not really well. We had a pullback, but more like a consolidation slash pullback. Going to the daily data points, just the really high readings. This is a level that usually results in pullback and or consolidation. So in this case, I will just write overbought, just very overbought, minus. I think I will give a -7 here in favor of the bears. It's just that we have extremely high readings that usually are not favorable for new bullish positions. And if you are, a e.l.f. beauty bull and you sit on a gain, you would at this point hopefully consider tightening stops, maybe taking some gains off the table because you have, a lot of gains. Looking at the seasonality here, the seasonality is bullish, but the caveat is that the period from December to January has a tendency to be bearish. In this case, we have seen this change in the seasonality. February, so far, the best February ever for the stock, 26%. So we have a very rare bullish reading. March, if you look at the sum, it is the second, well, it's the third, well, it's not a very high performing month because you do have the red months, but among the green months here, it is the second in line, the second worst quote unquote performing. April is a bit of a different thing, more bullish. So in this case, the seasonality was a bit messy. The issue for the bulls is that February it's been extremely good, but that also means that your future expectations should be reduced. The odds simply favor reversion. So I will give this one to the bears, give them -4. Here are the fundamentals. Looking at the blue here, this is price to book. In copper is price to sales, and green is price earnings. Price book, price sales is extreme. This is definitively not a value. Price earnings also relatively speaking high based on previous data. Looking at the forecasts, 11 analysts have a 1-year price target, and the average target is 2% below. Max is 11% above, but the minimum is 23-ish% below. Here are the ratings. It is tilted towards a buy, so most have a buy rating, but there are quite a few holds as well. Okay. From a fundamentals perspective, this is definitively not a value setup. So I will give the bears -8 here on the fundamentals. There were way better levels on this stock for the fundamental analysts. And especially after the latest move in the stock, which is most likely not something that the analysts had in their ratings. So even though you had some buy ratings here, some of them were most likely before the most recent stock move, the rally. Hence, yeah, if the analysts were to look at it again, most likely we would see a change. Okay, let's look at relative performance. Long term, we have a 45% correlation with S&P 500, 30% with the retail ETF XRT, then -28% with the online retail ETF iBuy. Short-term correlations, 21% with S&P 500, 43% with XRT, and minus 1% with online retail ETF. So we did not get any really strong correlations here. I will look at XRT, but we can't really jump to like big conclusions based on the data about XRT. We have seen some pullback here, support at this bluish 5-week moving average. On the dailies, we have a real classic moving average offering support. The purple 20-day moving average, it's a widely watched moving average. It's a component of many indicators, so definitively a big deal. It's a key support level. The 20-day was resistance back here, a great place to consider some short positions. The 13th of December was the big short squeeze, but you see that it closed way lower. But the 13th was one of those days that was frustrating, but not a reason to completely change how you use technical indicators to put on stops. And you see that in the vast majority of days do not have these kinds of anomaly candlesticks. But yeah, there's something here about the XRT that's it's sort of bullish, but the issue here is that we keep testing the 20-day. When you test the support level, you are sort of supposed to go higher, to rally. In this case, the bears keep pulling us back to that level, trying to break it. Looking at the seasonality, it is pretty bullish. Looking at the table view, February has, ever since 2016, been a bearish month. It usually was very bullish. March, the same thing. It had a tendency to be bullish, but then it became bearish, which is bearish. April is a different thing, but April is way out there in the future. So, there's issues here with the XRT. So let's now compare e.l.f. with XRT. So e.l.f. has unsurprisingly substantially outperformed the XRT, just hovering into extreme overbought territory. On the dailies as well, like massive outperformance, but that also means that this is abnormal outperformance. We usually see periods where the XRT outperforms e.l.f. So let's look a bit here at the seasonality. It has a tendency here to be bullish for e.l.f. The performance of February has been massively in favor of e.l.f., 24% outperformance. March also has a bit of a tendency to be bullish, but the most recent years we have seen that April is the clearly bullish month for e.l.f. So we looked at the XRT. It is at a key support moving average, but there's data that weakens the strength of that technical indicator. So I do think I will give the bulls a mediocre one in this case on relative performance. We end up with minus 4.5 in favor of the bears. The issue for e.l.f. is that we are ridiculously overbought. We have obscene readings on the fundamentals, on technical indicators. This is not a setup that has a tendency to be favorable for new bullish positions. It usually is more favorable for new bearish positions. So if you are a bear, this looks interesting. If you are a bull with a big profit on e.l.f., this is not the worst time to take some money off the table. It's about buying low and selling high. That doesn't mean that it's guaranteed that e.l.f. will go down, to have a bit of a cool down. It's more that the odds favor it. Like behavioral economics is really what is in play at this point. So we do have some time left. So I have a theme that I call body modification. It's sort of like in the same-ish territory as e.l.f. is, but of course very different simultaneously. But let's look at some of the stocks in that theme. First on the list is Katera. Oh, interesting. Interesting indeed. We are at a red 200-week moving average, but not really at support. The current setup here, let me get the yellow color because there's a big battle between the bulls and the bears around that moving average. So on the one hand, I look at it and I'm like, interesting from a bullish perspective, but then I look at this candlestick here. It went way down here. That's a bit dangerous. I don't like that there were sellers all the way down there. But this is interesting, potentially bullish, but there's some data here that does not exactly inspire confidence. Like that. The seasonality, not bullish to the left, to the right. March has a tendency to be bullish, but it's a bit messy. Looking at the fundamentals, price to sales is at a support level, but that is not the case with price. Well, price to book is at some kind of support level. You could even argue there's a bit of a head and shoulders pattern developing here, but that also means that around the shoulder region there is support. Let's look at the forecasts. They are bold, yeah, but there's only like 5 analysts with a 1-year price target, but yeah, the data is bullish. Katera is interesting, but let's look at others as well. Vero, Venus concept on the Nasdaq. Ooh, not exactly at all-time highs on the dailies here. There's just a lot of damage here to this chart. These kinds of charts can open the best bullish opportunities you will have, but then you need a very good support level, and in this case, that was not the setup. In the mode, maybe scheduled for a bit of a breakout. We had earnings. There was a bit of a bullish surprise. Let's look at the dailies here. Yeah, see, the bulls tried to break out here. Well, they did break out, but they didn't like establish a new high. Well, the bears pulled back. That's what happened. So, but there's something afoot here that could be bullish. Seasonality. We don't have much data to go on. Price to sales, price book, price earnings, interesting levels, not deep value, but relatively speaking, it's at a much lower level, so there's value in that case. The analysts are bullish. So yeah, we have looked at e.l.f. Beauty, and we also looked at some of the stocks in the body modification theme, and there were some interesting opportunities here. But yeah, overall, I do think that e.l.f. is very overbought, very much due a bit of a break. And as we saw, there were bullish opportunities in other stocks.